Hello, this is the TradeSite U.S. Stocks and Futures Market Preview and Domestic Economic Data Roadmap for the week beginning Monday, May 4th, ending Friday, May 8th, 2020. Welcome to May. By the way, we're only a week away from options expiration. Here's a look at the ES front month futures contract. This is the daily chart of the broad market in futures form. The last candle you're seeing right now. I waited until the markets opened, the futures markets opened on Sunday, just so we can always get a look. In this current environment, more than ever, I feel like at least, and I can guide you, I want to get a look at what's going on. So the ES is gapping down 50 points right now. The NQ is down 140. It's a big gap down now. Obviously, that can change overnight. We've seen that happen many times. But the initial gut reaction to whatever we've seen over the weekend, whatever's going on around the world, is a negative gap down again. So we'll see where we open in the morning. But I like to save the recording of this for that. Now let's go through the major daily charts. Then we'll look at the intra-week action. We'll talk about the economic data that's coming out in the week ahead. So here's the crude oil number, 1859 currently. Unbelievable. 1859. I mean, we were up near $70 back in January. 1859. That is just wacko. Gold up $3.10 to 1704. The S&P cash on Friday lost 81.72. Be interesting to see. Were we up or down for the week last week? We'll look in a minute. NASDAQ 100 down 282. Again, still above the 62% fib retracement. I'm going to go back to the S&P real quick just to show you that we are heading back towards the 50% fib retracement. We just bounced off of it, basically. So, the S&P made it halfway back to the loss, most of the loss that it gave up. This should be lower, by the way. There you go. But it's still sitting above that. NASDAQ, SOX down 86.84 on Friday. Big gap down and go. We were down, gap down, gap and go down Friday. It was a good day, a good week last week, but it was mostly because of Tuesday. Biotech's down 98.457. Russell 2000 down 50.18. VIX up $3.04, hit 40th high almost. The trend closes at 1.85, which puts the 10-day moving average at 1.09. No big deal. 3.7 billion NASDAQ shares, which is about average for right now. Advanced decline ratio on the NASDAQ, down negative 2070, one of the worst we've seen in a while, except for the first few days down in March. This is really negative. I mean, the market is not looking healthy internally. Advanced decline ratio on the New York down 2030. Google down $29.38. Apple loses 473. Netflix down $4.58. Amazon down 187.96. Tesla down 80.56. Facebook down 2.44. Goldman Sachs down 6.32. TLT, the 20-year bond ETF, up $1.43. The Dow down 622. Has not bounced that much, but it's just the Dow. Who cares? All right, intra-week action. Let's go to 10-minute candles on the ES, and what you get here is this. Last Friday, look at this. You can see last Friday's close. It's almost exactly this Friday's close. Everything for the week came down to like a point or two on the S&P. Gapped up on Monday, drifted higher. Gapped up Tuesday and sold off hard. We made the most money for the whole week on Tuesday in the morning. Flat for the rest of the point after that. Wednesday gapped up and drifted higher. There's the high of the week. Thursday gapped down. Pretty much a dead flat day. Why is that? Because it's the end of the month. Statements print. Nobody cares. Then Friday gapped down and sold off. And now we're looking at a futures gap down as well. NASDAQ side, not much different. Closed lower for the week by a little bit, but the general theme is the same. So this is what we're looking at. It is not pretty out there from that perspective. In terms of economic data coming out this week, and there's enough. We have Monday factory orders and loan officer survey. Tuesday trade balance, which is can be an important number, although it won't be as much now. Final services PMI, the ISM non-manufacturing PMI, and IBD tip economic optimism number. On Wednesday, ADP non-farm employment change, crude oil inventories, and 30-minute an hour into the market. Challenger job cuts at 7:30 on Thursday, along with the initial and continuing jobless claims numbers at 8:30 with preliminary non-farm productivity. We've got natty gas an hour into the market on Thursday, consumer credit at 3, and the unemployment rate Friday morning an hour before the bell with final wholesale inventories 30 minutes in. Some key data. Everybody knows the unemployment rate is going to be higher. It's projecting 16%. Think about that. The April number is going to be 16%. It was 4.4 in March, the biggest collapse in the history. I mean, it's worse than the Great Depression. It's unbelievable. All right, so that's what we're looking forward to for the week. We'll see what we get. And just from there, charts as usual brought to you by eSignal. If you've not yet taken a trial of our services, feel free to do so. We will help you out for a couple of weeks. Have a great trading week.